Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Yesterday, guys, we said that currently, since markets are really nervous and at the eve of the Fed Reserve meeting, and we said that probably currently it will be just safer and better to focus on some less politicized currencies. And among these currencies, we particularly see the Canadian dollar, the loonie, and the Australian dollar. Just a couple of words on our euro currency analysis. Well, as market has failed yesterday to continue move with the 4-hour hand shoulders pattern that we have discussed yesterday and have returned right back down below the neckline, well, probably, guys, we should forget about the possible retracement right now, and it's better to treat the pattern that now is forming on the daily chart on the euro currency just as the flag pattern. So do not take bets right now on the taking any longs on the euro currency. And market really shows how it is weak, and it's really could be really very expensive journey to enter long right now on the euro currency. Other currencies also is really politicized. So the Great British Pound, you know about the Scotland voting on 18th of September. So it's really not much major currencies that could be discussed right now, and that has and that feels the impact of the geopolitical tensions and the policy not as strong as euro currency, for example. So that's why today, guys, I have chosen the Canadian dollar for discussion, and also because it really shows nice setup that could be really interesting in the nearest perspective. And besides, guys, we haven't taken a look at the Canadian dollar for a considerable period already, so now we could refresh our view. So I will not bother you with the details, but currently we see the perspective, the Canadian dollar in the medium-term perspective could take it out of these tops. That's approximately 1263, 1263, 65 resistance area. And on the daily chart, it looks like the market has formed the reverse head and shoulders pattern. As you can see, it already has been completed, and even market has broken through the neckline. At the same time, market hasn't been able to continue move higher due to the daily overbought. Although you can see that market easily has broken through the really significant resistance, because that was the neckline, that was the major 618 resistance, 1227. And by the way, guys, that was also the pivot point. I don't have it on this chart, but that is also the weekly pivot point. And market has passed through it really fast. So that was the first challenge here was a couple of days before that, shy retracement and breakout. Breakout has happened. By taking the target, the classical target of the head and shoulders, you can calculate the distance between the bottom of the head to the neckline, counted in the point of the breakout. It points approximately at the 1360 area. That's potential target for the for this setup on the medium-term perspective. But as you can see, this target stands really too far from the daily overbought, and that's why it is not very interesting right now in the current week. We will keep in mind this point for the medium-term perspective, but right now we are mostly interested with this point. What we have here, by taking a look at this ABCD pattern, usually the target of the ABCD that based on the hand shoulders should be treated as the minimum target. It's most probable target. And right now you see that the CD leg of this pattern is much faster than AB leg. Also, guys, in the second part of the head and shoulders, that how it should be, we see the real thrusting action. That is very good for head and shoulders pattern itself, because particularly this price action we should get to rely to get the confidence with this pattern. As you can see on the right head, we also on the right shoulder, we also have these thrusting candles to the upside. And this action suggests at minimum the reaching of this target and if it will happen with the same pace and market will reach the target before it should be reached by the normal slope of this ABCD leg pattern, it will also suggest the possible upward continuation. That is very probable that this is also will be the 1618 extension. So for example, let's check this out. If we will draw this, where it will be the 1618, 1618 will be right, slightly higher, not very big distance between them. Anyway, currently this is really positive. This is really a positive sign for the market, that market really shows the acceleration here, and really only the daily overbought prevents market right now from the possible continuation. If we will take a look at the 4-hour time frame chart, we'll see that market here is forming the butterfly sell, and market hasn't quite reached the 1618 target. Here, guys, I draw the levels that is based not at the current top. The focus number is not here. I have used the focus number as the target of the butterfly, because I suggest that before any significant retracement will start, market probably will reach the 1618 target of the butterfly and will react particularly on the completion point of this butterfly pattern. In this case, you can see that this area could be very interesting for us. So, 110, 114, 13 confluence support on the 4-hour time frame chart. That stands right around the neckline. So market could complete the butterfly, show the retracement, retests the neckline, the broken neckline, and continue move high. So I think that if this scenario will appear, that really could be interesting area for a possible taking the long position on the Canadian dollar. Also, guys, here you can see the perfect example of the bread butter buy. Unfortunately, guys, it's almost done already, but still, that's very good example. So thrust up at the third close below the 3x3 with this candle. I will increase the scale for you. At the third close of the below the 3x3, market has reached the 3.8 support and start move retracement up. But unfortunately, this pattern already has reached the target. At the same time, that's not very important for us. We're particularly interested with a bit larger scale patterns, precisely speaking, with this daily ABCD pattern, or even with these head and shoulders that really within the couple of weeks could reach this area, 1365 probably. At least it should take it out of this top. Well, that's our current view on the Canadian dollar. So the trading plan as follows: wait when the market will complete the butterfly and start retracement down, or if market will show this minor ABCD, for example, A, B, C, D pattern, that's also possible. Anyway, think and watch for this area around the neckline and for our confidence support as the potential suitable area for taking long position.